Hey, this is Justin with DayTradeTheMarkets.com on Tuesday, January 15th. First of all, I apologize about my nasally voice. I think, like a lot of North America, I'm battling something or other. So forgive me on that one. But what I wanted to do quickly tonight was just kind of look at the Emini S&P from today and just talk about how along the way we could make sense. It certainly wasn't the most exciting day that we've ever seen, but just wanted to talk about some of the evidence that we were seeing and how you can better make sense of what's happening. Now heading into the day, obviously our bigger picture bias, which is one of the pieces of evidence that we look at. And just to give a little bit of a background, what we like to do is we like to look at various pieces of evidence or pieces of the puzzle, and the more evidence that we can have to support a decision, the better your edge. So we look at various things both in real time and also in the bigger picture bias and some of our bigger picture levels, and we take all those pieces of evidence and look at them as pieces of the puzzle. And the more of the pieces of the puzzle that come together, the better your view of what's happening is, and the better decisions that you can make. And as a trader, if you can consistently make better decisions, you're going to get better results. So hopefully that makes some sense. So first of all, what we like to do going into each day is talk about our bigger picture bias. And heading into the day, our bigger picture bias was up. However, we did gap down from yesterday's close several points, depending on how you define a gap. We gapped down from the close several points. We gapped down about a few ticks from yesterday's low. So the first thing we want to ask ourselves is, will this gap continue, and are we going to head lower, or are we likely to head higher in line with the intraday or bigger picture bias? So that's kind of the first thing we want to look at. And the first way that we typically like to look for that is to look for the first, what we call major structure. And when I talk about major structure, what I mean by that is what I would look at as what we call a level 2 or a level 3 aggression bars. And aggression bars are kind of the first building block of what we look at. They're really telling us what's going on under the surface of the market, the order flow, and telling you not just which side is more dominant at a given time, but to what degree. So these level 1 bars are good information, but you don't want to go crazy making decisions on those. They're just giving you a little bit of information. It's telling you when one side is moderately coming in with more buying or selling aggression. It's when we get a strong, a level 2, or an extreme, a level 3, that we really want to pay attention. So one of the things that we like to do is have a look at the first major structure of the day. And again, you can see here that we have a lot of these lighter red and lighter green. Those are level 1s. And what I can do actually is just take off, so we just show level 2 and level 3. So at this point you can see we've cleaned up the chart so that we just have this level 2 bar here. Here's a level 3 buying bar, level 2 bar, level 3 bar. And here's a level 3 selling bar you can see toward the end. But what we like to look for is our first major structure, and that was this one here that didn't come in until about 10:57. This happens to be on a 1-minute chart. You could use this on any time frame. The same logic would apply. But at 10:57 Eastern Time, we had our first level 2 buying bar. So you can see we didn't have any selling evidence that was coming in at all. We were just kind of grinding higher. And so I actually talked to somebody who thought the market was turning and took some shorts today. And what I was trying to explain to him was that, that's fine. You can have an opinion, but there was no evidence to support, at least the way we look at the market, no evidence to support that any selling was coming into the market. It wasn't until this bar here that we had our first major sign on one side or the other that there was seeming either some buying or selling aggression that was relatively strong, and you could see that it was a buying bar. And so when we have a buying bar like that, the first question we want to ask is, can the low hold? And it's taken out by a tick or two, but do we get a full bar above or below? And you can see that first we took out the high, had a full bar above here, then tested the low. That low held. You can also see that by this time the filter, which is telling us what the order flow is telling us, there's more buying coming into the market. So it's starting to turn on us there. And so you can see that's our first sign, and the bulls essentially won that. So it's letting us know, and that happens again to be in line with our bigger picture bias heading into the day. So it's letting us know buyers are in control. And then of all things, we would certainly want to be avoiding any short opportunities, and we'd be looking for some long opportunities. The next major structure that we had then was this level 3 or extreme buying aggression bar that happened on the high of the day. And when that forms, typically as long as it's in line with the direction that we want to go, we want to try to find a way to take action with that. And one way to do that is certainly just to buy it as a market on a breakout. That's one way to do it. A more conservative way would be, as soon as that bar forms, to place a limit order either on the low of that bar or one tick above the low of that bar in what we call the level 3 retracement type trade. Now, there wouldn't have been a fill there; it just touched there, but that's the idea. And then once that we got acceptance above, then we're looking for some other way to get long. Now, shortly thereafter, we had what we call it, here's a support resistance zone, a support zone formed here at this level between 62.75 and 63.25. So that's also telling us that this is a pretty good area to be looking to get long. Happens to coincide with the low of this level 3 bar as well. The filter is strongly bullish at that time. Our bigger picture bias again is up. So all signs are really pointing to wanting to be on the long side of the market. So getting long somewhere in here, whether you just put a limit order at the top of this at 63.25, you take 5 ticks of heat on that, or whether you wait for some kind of confirmation, which in this case could be a deceleration here or here or here. That's a pretty good opportunity, a pretty good location to be getting long. And again, going back to that idea of the puzzle pieces coming together, or being able to have the discipline and patience to wait for several pieces of evidence to line up, that's certainly kind of one of those textbook type of opportunities somewhere in this area. Okay, so again, to recap, our bigger picture bias is up. All the structure to this point has been owned by the bulls. We have a support zone here, the green zone. Our filter is strongly bullish. You can see that a lot of things are lining up. So hopefully that makes sense. And whether you just place a limit there or you wait for some kind of confirmation here, it's certainly an area that unless you would see some strong bearish action coming in, that you'd be looking to get long. Okay, so then we go up and test the highs, and you can see this is a yellow zone. Normally that would be a red, like you see this one yesterday was red at the end of the day. That's resistance. When it's yellow, it's kind of like a yellow light. It's our caution zone. It's telling us we certainly want to monitor this area for some resistance, but the expectation would be that the market wants to head higher. In other words, there's a lot of strength behind the market when this formed. You can see we had a level 2 bar there, and then a new high on a level 3 bar, and this yellow turned over to green. So again, trying to get long toward the low of this bar or a tick above it, happens to coincide with this green zone, green filter, bigger picture bias is up. Kind of all signs point to go and getting long somewhere in here. Now, only rallied 2 points, but as it did that, you can see that as we were making new highs, that's when our first sign of selling for the whole day started to occur. Right there, you can see that level 2 selling bar. So that's a pretty good sign, especially if that low can get taken out, that you want to get out of your trade. So if you got long somewhere around 66 or 65.75, when this bar comes in, a point and a half higher or so, 2 points higher, it's telling you, at least beyond alert that this market might be running out of steam. So, it's just, it looks a lot of arrows on the chart there. Hopefully that made sense as I was doing it in chronological order. But, I like to go through these days, even if they're not the most exciting days in the world, and just kind of talk about the idea of making sense of what the market evidence is telling you. And I think that's such an important point that if you've listened to any of these videos, you probably heard me harping on this before. But, it's so important not to, at least in our opinion, by no means are we the only expert in the world, but in our opinion, it's so important not to get caught up in trade setups. Most traders get caught up in, well, if A and then B, and if this crosses over and this and the other thing happens, then I'm going to get into a trade. It fits my rules. We try to flip that around. We try to, number one, try to make sense or put the market into context. Try to understand, are bulls in control? Are bears in control? Are we trending? Are we consolidating? What's the market doing? Once you have that, that's where you have your edge. Then when you have the market put in some context and you're able to make better sense of it, then you want to look for a low risk trade opportunity. So, instead of, looking for a trade that fits rule A, B, and C, and then hoping the market happens to be in line with what that trade entry is, we try to put the market in context first with evidence, with real-time market-driven evidence that's pretty easy to understand visually. And once you have that evidence, then you're looking for low risk, high reward trade opportunities. So hopefully that makes sense. If you have any questions, by all means, let us know. Or if you like to look at other markets or other time frames or whatever, you can just send us an email at info@DayTradeTheMarkets, and I can do a video on that. So because again, no matter what the market is or the time frame that you're using, the same logic would apply. You're just waiting for the market to give you actual true evidence as to what's going on under the surface. When you have that evidence, you turn that into better decisions. So hopefully that makes sense. Again, I apologize about my voice, and we'll talk soon. Thanks.